Hello, my name is Joe Hoyle, and I'm one of the co-authors of your financial accounting textbook. And in this video, we're going to look at what is referred to as comprehensive income. We've dealt with a lot of questions about net income, but if you look at a set of financial statements, you'll also find that companies report something called comprehensive income. And I want you to understand how comprehensive income is different than net income. So as always, you can be a wise decision maker. So here's a little problem that I found earlier today that I thought was quite interesting. In 2020, Lockheed Martin, which is the gigantic aerospace company, reported net earnings or net income of $6.8 billion. So net income for Lockheed Martin was $6.8 billion. So that's the net income. That should be fine. However, on the very next page, you'll find that the company also reports that it had comprehensive income, but it was only $6.3 million. Comprehensive income was $6.3 million. Now, immediately I would get confused. If net income is 6.8 billion, how can comprehensive income be possibly 6.3 billion? Why is the comprehensive income $500 million lower? How can there be a difference here? So that really the basic question is, when you see a statement of comprehensive income and it shows a comprehensive income of $6.3 billion, what are you seeing? I mean, really, that's what taking a class in financial accounting is all about. When you see something in a set of financial statements, what are you seeing? And how can you make use of that information? Here we're giving you a number, comprehensive income of $6.3 billion, that a lot of people simply would not understand. But I think with a little bit of work, you'll be amazed at how quickly you'll come to understand what comprehensive income means. Now, I want to tell you that I'm going to keep this relatively simple. If you want to learn a lot about comprehensive income or any of the other topics in this course, you probably need to take an upper level accounting course. But I do believe I can give you enough information that you'll have a basic foundational knowledge of financial accounting. According to US GAAP, and this is a set rule, as so often in these videos, here's the rule. A company such as Lockheed Martin can have a few specific gains and losses. They are identified by FASB. These are not random. These are gains and losses that FASB has specified that are so odd and unusual. And I don't even like the term odd and unusual. They just don't fit in as normal gains. FASB requires that they be left out of net income. So there are going to be some gains and losses that, according to US GAAP, do not get put into net income. They're simply not going to be included on the income statement. Now, immediately, it seems to me that would raise two questions to anyone. The first question is, if you don't put these gains and losses into net income, where do you report them? Where are these gains and losses going to be reported? And then secondly, how does that affect or create something called comprehensive income? How does that lead us to comprehensive income? The odd, unusual gains and losses, where do they go? And how do you determine comprehensive income? If we can answer those two questions, that I think for an introductory class, you'll have a great knowledge in this case. So I'm going to start out and just give you the answers here to begin with. Again, I'm keeping this relatively simple. Hope you'll enjoy financial accounting so much that you will take more accounting. A few specific odd and unusual items are reported, and they're not reported in net income. They're reported within the stockholders' equity section of the balance sheet, and they're termed accumulated other comprehensive income. So those items are not reported in net income. Instead, they're reported over on the balance sheet in stockholders' equity under accumulated other comprehensive income. The reporting of the gains and losses are different. Why? Because there's gains and losses are simply not normal, traditional gains and losses that a company would normally have. So our first answer is, where do you report these gains and losses? Well, right there. You report them in the balance sheet within stockholders' equity as accumulated other comprehensive income. Go find a set of financial statements. Go look at the balance sheet. Go look at stockholders' equity. See if they have accumulated other comprehensive income, and you'll know what it is. It's some specific gains and losses that FASB has required to be put there instead of on the income statement. But now, how does that help us to get a number called comprehensive income? Well, comprehensive income is determined by taking those same gains and losses and recomputing net income and immediately including the gains and losses within comprehensive income. So they are not reported within net income, but you have this separate computation, and that separate computation does include them in comprehensive income. You don't include them in net income, you include them in stockholders' equity. But then you make a separate computation and you put them into income, but you call this comprehensive income. Net income does not have them, comprehensive income does. Some decision makers are just obsessed with net income. That's all they care about. Other decision makers are interested in comprehensive income because they're interested in including the effects of those gains and losses. But what I hope you will do is that you will always look at both, because Lockheed Martin is reporting two numbers. They're reporting a net income of $6.8 billion, and that's important information. And they're reporting a comprehensive income of $6.3 billion, and that's also important information. It's not that one is better than the other or one is more important than the other. They simply give you two different pictures of the income of Lockheed Martin, one with the gains and losses out, that's net income, and one with the gains and losses in, and that's comprehensive income. Where do you put them on a real set of financial statements? Within stockholders' equity, and you call that accumulated other comprehensive income. Now, I want to show you a real quick little example just to see how that works. Let's assume that ACE Company makes a $120,000 investment in the bonds. We're not talking about stocks here. We're talking about debts. You can buy a company's debts. It's called buying a bond. So we're going to buy a bond from Zalon. This is a debt instrument, and it's for $120,000. ACE does not believe, now notice I said does not believe, that this is a trading security. This is not something we ask with equity securities. They're all handled one way. Bond investments or debt investments are handled a couple of ways. If you're going to sell them, the investment, immediately or very soon, it's considered to be a trading security. You're just going to buy it for a short period of time and then sell it. That's a trading security. Or you can buy it and hold it until you need the cash. Probably not hold it for long, but hold it until you need the cash. And that's called available for sale. Sell it immediately, it's a trading security. Hold it until you need cash, it's available for sale. At the end of year one, the bond investment is now worth $127,000. What does ACE report? So you've got an investment in a bond security. It's not a trading security. They're not going to sell it very, very quickly. It's available for sale. They're going to sell it when they need the cash. And it's going up in value from $120,000 to $127,000. Now, in that situation, if it had been a trading security, they would have increased the asset to $127,000, the fair value, and the $7,000 gain would go into net income. If it's a trading security, this bond, then the gain goes into net income, which is exactly what we did when we were looking at equity securities when only a small amount of the stock was being held. earlier in this chapter. Trading securities, two things. You report them at fair value, and any gains and losses go into net income. You know, people tell me this course can be difficult. That doesn't seem very difficult. I can write that down in 1 or 2 lines on a 3x5 card and just learn it that way. It's not that terribly hard, I don't think. If the investment, however, is available for sale, meaning they're going to hold it until they need the cash, then there's 2 things you need to notice. The first is that the asset is still reported at fair value, $127,000. Either way, you adjust it to fair value. But, and here's the key thing, according to FASB, this gain does not appear in the income statement. Now, as soon as I say it doesn't appear in the income statement, you should say, well, if it doesn't appear in the income statement, where is it going to be reported? And the answer is it will be an accumulated other comprehensive income in the stockholders' equity section of the balance sheet. So is that gain in net income? No, the gain is not in net income. It's in the balance sheet in stockholders' equity, and it's called accumulated other comprehensive income, and it's a $7,000 gain. It does get reported, it just gets reported at a different spot. Now, these are the rules. This is how companies do this kind of a reporting for things like unusual gains and losses. So we have one more question then. How does this company report its comprehensive income in this case? The gain is not put in net income. We already know that, but it's reported in stockholders' equity. To provide useful information, they have a second computation or separate computation, and the $7,000 is included in the company's comprehensive income. So if this was Ace Company would have net income. They would then take and say, well, we didn't include that $7,000 gain, so let's include that $7,000 gain in comprehensive income. So as an example, if net income was $250,000, just as an example, then comprehensive income is $257,000. The gain is not included in net income, but is included in comprehensive income. So when you see comprehensive income, you know what it is. It is the net income with the gains and losses added in that FASB has required them to leave out of net income. Okay, so let's just review that a little bit, since I think that's kind of a complicated computation. Net income leaves out certain gains and losses identified by FASB. Those gains and losses have to appear somewhere, so they appear in the balance sheet within stockholders' equity, and they're labeled accumulated other comprehensive income. We've done one, and that one we've done is the gain or loss on the change in value of an investment in a bond that's classified as available for sale. Each year, any comprehensive income is reported within financial statements, and that includes the effect of the current year gains and losses so that they can be seen as the impact on net income. Even though they're left off, the comprehensive income allows you to see that. So if I return now to Lockheed Martin and I tell you net earnings are $6.8 billion, but comprehensive income is $6.3 billion, and I ask you, why is the comprehensive income $500 million less? Now we know the answer. Certain gains and losses were left out of net income according to FASB, and they were stored in accumulated other comprehensive income on the balance sheet within stockholders' equity. But so that Lockheed Martin could compute comprehensive income, they were included in this computation. They were not included in the computation of net income, but they were included in the computation of comprehensive income. The income is $500 million less, because apparently they had losses that they did not report in net income. I think this is always a fascinating when you see something in a set of financial statements and you simply don't know what it means, then you can't make wise decisions. But something like comprehensive income, if you know what you're seeing, provides you with additional information. And additional information is always good for wise decision making. My name is Joe Hoyle. I'm one of the co-authors of your financial accounting textbook. As always, I enjoy the chance to talk with you about the wonders and interesting things that happen in financial accounting, including things like comprehensive income. Have a great day. Make an A.